The title of this one from the Corellian Academy is What Next from the Dollar? And let's face it, the dollar has been in some demand over the last month. Since just the middle of July, the dollar has risen 7%. That's quite a big move in foreign exchange terms. It's been a bit sleepy in the past, but we've got a bit of volatility in this, and the dollar has really driven everything forwards. So a rally of 11 weeks in a row was only broken by brief decline last week. As you can see here on the chart on the bottom left here, the dollar index weekly chart shows you the steep climb up. No setbacks really at all. This is a powerful move. It opened, although it opened higher again this week after geopolitical pressures in the Middle East. There have been a few issues that has it overextended itself? Is the dollar still the best out there, and why? Now, the dollar is highly correlated to moves in the US bond yields. I've mentioned this to you many times before. And if you look at the chart on the right here, this is the 10-year yield chart for 2023. Overlay that with the chart on the left, which is the dollar index, and you can see the correlation is pretty tight there. So we've seen a very good move in bonds. And I think there's some very good reasons for this. And I think at the moment, it's hard to fight the fundamentals that have been sitting behind this with all sorts of issues going on. So the question is, why has the dollar rallied? Well, to be honest, there's several reasons for the rally. The strength of the US economy has been one of the outstanding, well, let's call it US exceptionalism within the data. We've seen strong data when data in Europe has been pretty shockingly weak, the UK suspect, and around the developed world, the data has been pretty weak, including China. So, the dollar has been what we sometimes call the cleanest dirty shirt in the laundry. The economy is still adding jobs. They've got a tight job market, rising wages. Manufacturing activity has been rebounding. Services activity, which has been driving the economy, as you can see on the chart on the right here, has been pretty strong when others have fallen into contraction. The US is still in expansion. So this US exceptionalism is actually what is driving people into US assets and the dollar. And, the fact that there's a yield differential in there as well, which we'll explain in a minute, is key to all of this as well. So the dollar is attracting global money. And, the strength of the most Fed speakers, interestingly, have been, until just yesterday, discussing at least one more hike. This higher for longer, so higher rates from here or holding here for a long period of time. You would expect that to keep pressure on the economy, but because they've got this hawkish stance, people believe that the dollar could go higher as rates go higher in the US as well. So at the moment, when I wrote this a couple of days ago, the market was pricing about a 50% chance of one more hike in the end of the year. That's come off slightly in the last 2 days after some Fed speakers have seemed to have changed their minds. But overall, this US dollar exceptionalism is still driving the dollar. By comparison, the ECB hiked, but suggested they may be done now. The Bank of England, Bank of Canada, RBA, SNB, and RBNZ have all paused at their last meetings. And so we get the interest rates, or the bond yields, if you like, higher in the US than they are in the rest of G7, and therefore those yields have a better return. So holding dollars pays you money, and that's why we've seen the dollar rise. And that's a key factor for this dollar dominance that we've seen over the past couple of months. So there is also a situation where if stocks do fall, or if we have a geopolitical event like we've seen with Hamas in Israel, that the dollar is also seen as a safe haven. It has safe haven status during times of stress. So if we look at the US 500 chart, this is a 4-hour chart since September the 1st. The fall we saw there, using the stocks have fallen pretty steeply actually on part of that. But if you look what happened to the euro, which is obviously inverted to the dollar, the euro fell as well. So this is dollar strength. So the euro weakened quite a bit underneath that as well. And it shows you again the correlation between risk and the dollar. And the dollar has outperformed other traditional safe havens as well. So some of the safe havens that people thought would be there, like gold, has done extremely poorly. The problem is that gold has no yield to it at all. But you can buy the safe haven of the dollar and earn, 4% on it. So and more than you can against other currencies. And so this attraction has been pretty strong. It makes a lot of sense. The fundamentals sit with that view as well. And so you really shouldn't be surprised to see the dollar strength at the moment. The question is whether that lasts from here on in, of course. So that brings us to the next question. What next for the dollar? So is the dollar topping out? Well, the Fed still need to react to data, and we've got CPI released tomorrow. That's Thursday for those that are picking this up later. Expectations were for a slightly higher print. Those are still there. Could this be a pivot point for the dollar's next move? Very possibly, because CPI, which is inflation, obviously, is a key component for Fed policy. It's right at the heart of it, to be honest. And so therefore, we have to consider this going forwards. So all eyes are on what the consumer does next. Will they spend or tighten their belts? There are some signs that maybe the consumer is beginning to slow a little bit. But I think also some of the Fed speakers have just started coming out being a little more dovish. Even a couple of the hawkish speakers, those looking for higher rates, have suggested maybe the rise we've seen in yields is enough to actually keep the economy restrictive, so no more need for rate hikes. But that's just a couple. We need to hear what Powell has to say. But much will depend on how markets react going forward to the uncertainty of the situation in the Middle East. If it's contained, I mean, it is a human tragedy, we have to say that. But if it is contained within those borders domestically, then okay, we may be able to move on from this. The problem is if Iran gets pulled into this, that's a completely different story. But this geopolitical situation potentially could destabilize markets. But again, the benefactor of that could be the dollar if markets do get stressed. So let's hope it doesn't go there. But the dollar index chart here is beginning to sort of move to mid-range. And I think there's a lot going on at the moment that we could see some volatility in the dollar going forwards over the next 10 days.